Hey there traders, and welcome back for episode number 59 from the StockBandit.tv. I'm always glad that you made it, and I hope that your weekend has been great for you and you're getting geared up for a brand new week of trading, because of course that opening bell is gonna ring on Monday morning, and when it is, that is the sound of opportunity, and we've got to be ready. So as we approach a brand new week of trading and we take a look at the major averages, that's a place to begin. We know that most individual stocks are going to be influenced by what the big picture or major market averages, or the market is doing. And so we're going to run through the major indices, the NASDAQ, the S&P 500, and the Dow. And I'm just going to show you for a few minutes what I'm looking for, important areas and kind of characteristics of the way this market is currently moving that I think is worth noting in front of a brand new week of trading, and as we formulate a trading plan for this week. So I would encourage you to get a charting program if you don't already have one. It's always good to maintain a very close watch on the charts, not only to find new individual stocks to possibly play, but also to keep an eye on the major averages, to draw trend lines, and to make notes of things that you find important. So with that said, let's keep going. Up first is the NASDAQ, and last week we saw the NASDAQ was able to really cap off its 8th consecutive weeks of gains since this March low. So clearly we've come a very long way, and we've done so very persistently. During that time, we've seen a couple of 2-day pullbacks, but that's the extent of the downside that we've seen. 2 days in a row on the downside is all we've gotten throughout this entire stretch. So clearly every little dip has been very short term. It's been very temporary, and every time we do see a dip, the buyers are stepping up very quickly, and they're doing so aggressively to push this market continually to new recovery highs from this March low. Now last week we did that, but the character seems to be changing a little bit. Now the NASDAQ cleared its former high with ease, and it's been spending the last several days above that horizontal trend line right there. So in that case, the NASDAQ is the clear leader of the bunch. It also has some resistance up here at around 1785. So if we do continue to climb higher, that's the next zone I would expect to see some possible profit taking, or maybe a little bit of a battle to set in. However, if we do finally see a little bit of a pullback, I would expect to see this 1670 area tested. It's kind of between 1665 and 1675. But that's really the area, that's the neighborhood that I think that if we do happen to pull back, I would expect to see some buyers try to step up in that area. So for the NASDAQ, that's what I'm looking at here. But let me make note of one other thing. First of all, we've had a few days of lighter volume recently, and so that's of note, and that could be due to summer approaching and people maybe starting to take some vacations. But the other thing I want to point out is the fact that for the past several days, we've finished well off the session highs. So I'm circling all these bars to show the hash marks right here. That is the closing level for each day. We're finishing well off the best levels of the day. All of last week we did that, and that really implies to me that we're seeing some early strength in the day, and then we're seeing some late day profit taking. Now, whether or not we finish positive or not is just the extent of this profit taking right here. But right now, the way I'm interpreting that is that this market may be getting a little bit tired. And who's to blame it? After a move of this magnitude and of this duration, it would be no surprise to see some kind of a pullback set in. I'm not predicting a major market reversal here. I'm simply saying the further up we get and the more we start to see some of this kind of fatigue type price action where we're finishing weak late in the day, day after day, I think that's noteworthy, and we may need to be on our toes for a possible pullback. Now for the S&P 500, 875 has persistently been a very important level. We flirted with it the last 3 days of the week last week. We finally closed above it on Friday by a whopping 2 points, and we did that on very poor volume. So S&P still very much contending with 875. If it can clear that level, then the next level is up here at about 915. The Dow, I'm also watching this index. This is the least important of the bunch to me because it is only 30 stocks, but 8350 is a very important level. It's about 138 points above where we finished on Friday, but again, volume is very weak and we made new recovery highs in this index last week, so it's acting like it's kind of tired and it's approaching a very important level up here at 8350. So if we do get up there, I think that's certainly an area to start being a little bit careful with. And I really would prefer to see some kind of a pullback in the major averages, not just the Dow, S&P, but also NASDAQ. Some kind of a dip would help us separate the strong stocks from the weak ones. It would also give us a little bit better indication of just how aggressive are the buyers going to be when we get a pullback that lasts longer than, of course, just 2 days at a time, because we've seen a few of those. Let's see what happens if we get a pullback of a week or two. Are they there to step in and provide bids and add some support, or do instead they run and hide? So that is what I'm going to be watching for this week. So as always, thank you very much for joining me. Hope I've given you some levels to watch this week in the major averages. Of course, I will be back soon with more videos, but in the meantime, trade like a bandit.